Good morning, and welcome to the Leap Podcast, your concise, level-headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, 22nd of May, 2026. After a strong April rebound, the crypto market has shifted into a consolidation phase, digesting fresh macro and geopolitical inputs. Underneath the price action, the institutional and structural case continues to build. The major corporate disclosures, regulatory progress, and steady long-term accumulation. Let's leap in. On the macro front, April US CPI came in at 3.8% year over year, and the April FOMC minutes released this week reinforced the higher for longer message, with markets repricing rate cut expectations to later in the year. Today also marks a notable transition. Kevin Warsh is being sworn in as the 17th Federal Reserve Chair, replacing Jerome Powell, and his first FOMC meeting in mid-June. Geopolitically, U.S Iran tensions remain the key swing factor. Oil prices spiked earlier in the week, with Brent briefly above $111 per barrel, before easing on reports that talks are entering their final stages. Brent has since pulled back towards $105. The direction of travel this week has been towards de-escalation. Turning to prices, Bitcoin is trading around $77,300, down approximately 3.2% week over week after testing the $82,000 resistance area earlier in the week. Ethereum sits at $2,134, down roughly 6.8% on the week, while Solana holds up well around $86, down just 2.2%. Total crypto market cap is approximately $2.55 trillion. The Fear and Greed Index has shifted from greed back into fear territory, which in past cycles has often been associated with periods of increased market caution and positioning by participants. The recent move has also been accompanied by a significant deleveraging event, with open interest dropping roughly $1.5 billion and perpetual futures funding resetting to neutral. Historically, that kind of clean-out has preceded periods of more stable market conditions, though outcomes can vary. ETF flows have softened in the short term. The US spot Bitcoin ETFs recording around $1.6 billion in net outflows over the past 10 days, ending a 7-week run of inflows. Context matters here. Cumulative ETF assets under management still exceed $85 billion, and altcoin ETFs continue to attract capital, with XRP and Solana funds both seeing healthy weekly inflows. Beyond price action, this has been one of the more meaningful weeks of the year for institutional and structural news. SpaceX filed its long-awaited S1 on Wednesday, disclosing 18,712 Bitcoin on its balance sheet, worth approximately $1.5 billion at current prices, with a cost basis of just $661 million. That makes SpaceX one of the largest corporate Bitcoin holdings globally, ahead of its planned NASDAQ listing. Strategy continues to lead institutional accumulation, with over 818,000 BTC having surpassed even BlackRock's ETF in total holdings. While the company has flagged that Bitcoin sales could be used to fund a $1.5 billion debt repurchase, Michael Saylor has been clear this is tactical capital management and has publicly commented on institutions to continue accumulation, subject to capital management considerations. On the regulatory front, the Digital Asset Market Clarity Act cleared the Senate Banking Committee on 14th of May in a bipartisan 15-9 vote, with 2 Democrats crossing the aisle. The bill now heads to the full Senate floor. The White House is targeting a 4th of July signing, which would be the most significant US crypto legislation in years. Polymarket currently puts the odds of clarity passing this year at around 64%. Putting it all together, the S&P 500 has continued to push higher this week on AI and earnings momentum, while crypto has consolidated under near-term pressure from rates, ETF flows, and Middle East headlines. That kind of short-term divergence isn't unusual in past cycles, and the long-term structural story for the asset class has continued to evolve alongside these developments. Looking ahead, key watches include whether Bitcoin can defend the $77,000 zone and reclaim $80,000, a return of ETF inflows, progress on the Clarity Act, and Chair Warsh's tone heading into June. In summary, this is a textbook digestion phase after a strong April. Macro and geopolitics have introduced near-term caution, but institutional accumulation is broadening. Regulatory clarity is advancing, and corporate adoption signals continue to validate the long-term thesis. Remain calm and stay informed. That concludes your market update for the 22nd of May, 2026. Check the YouTube and Spotify links for more information. Thank you for listening to the Leap Podcast.